Hey guys, welcome back. We thought, why not, after all the AI, let's go back to banking and look at Credit Suisse and what's happening there. So we thought it's going to be a smooth, short journey where we're going to see how SVB has led to Credit Suisse and, how things have just sort of had a domino effect and things have gone one greater than the other. However, we saw that the current happenings are only the tip of the iceberg. Credit Suisse has a long history of doing not the most secure things in the world. So we thought, why not dive into Credit Suisse and give you a bit of a overview of the journey that has been Credit Suisse. So let's talk about Credit Suisse. Welcome to the Thought Bistro podcast with Akhil and Vishruth. Here we bring you the weekly news, book reviews, and world views from a different lens. Our mission is to provide a platform to explore different ideas and different perspectives and allow you, our listeners, to develop a deeper understanding.
A 167-year-old bank fell in 72 hours. And, I was watching this one show, this Indian show, in which the wife of this fellow, she says, this girl became Miss World overnight. And he says, we like to recognize it as an overnight success. But actually, it takes a lot to get to the point where you become something and where you can become like an overnight success. This side, it is complete opposite. It takes a lot to become an overnight failure and this massive a failure. So this discussion is going to be a very interesting one.
A failure massive enough that you're being rescued by your biggest rival.
Rival, the only alternate in the country, and you're being called a systemic failure, and you're being called that does this put the entire world at risk and the entire world banking at risk. So let's explore further where it all began, the rise and demise. So let's start with the rise.
So Switzerland, as you know, is a very tiny country in the middle of Europe. It's mostly mountains. It doesn't really have too much about it. One of the main reasons it is known around the world is because of its banking system. And Credit Suisse was one of the first banks that set up shop in Switzerland, and they sort of put Switzerland on the map. This was 167 years ago, where Alfred Escher set up Schweizerische Kreditanstalt, which was later rebranded as Credit Suisse in 1856.
I would say thankfully rebranded as Credit Suisse because I don't want to pronounce that over and over again.
It took me 5 tries to get it right just about now. So it does, however, keep its abbreviation. It's still referred to as SKA, which was the original name.
So the primary reason why the bank was founded was because this fellow wanted to develop the Swiss rail, and develop the Swiss rail it did. It connected the south and the north of Europe and became quite a prominent part of Europe because of that. Later, the same bank, our Credit Suisse bank, became a very important part of the development of the currency of Switzerland, which is Swiss franc. From the currency to the electric grid, it was a very important part in the infrastructure of the entire country. So it was not, everything doesn't start out with rot. And then in 1940, it opened its New York branch, the first New York branch. And when America comes into the picture, so does capitalism, and so does a lot of greed.
A lot of its older employees say that the change of its DNA, so as to say, started when it got into America in full flow, and it started thinking about opening up an investment banking division by acquiring a 44% stake in First Boston. Now, First Boston was coming off a $100 million loss, which had led to the firing of a fair few of its executives. But this is where Credit Suisse stepped in, and they bought a 44% stake, which later became a controlling stake, which they, I think, till this date own, a controlling stake in First Boston.
Actually, it started before the acquisition of First Boston, or it started before their partnership with First Boston, I should say. Earlier, it came out that during their financial restructuring of Europe, post a lot of conflicts, some of the Holocaust survivors, they were blaming Credit Suisse for not giving access to their deceased relatives' bank accounts. This was actually because of the 1930s change in the law in Switzerland, where they decided that the access to somebody's bank account will only be given if the individual can give them verbal confirmation that, somebody else can get access to my account.
They needed explicit consent.
That's a better way of phrasing it.
Yeah, this made Switzerland one of the world's banking hubs as it is even today because of this don't ask, don't tell policy that they have. This did bring a lot of infamy because most law organizations and most people were like, you're going to be attracting criminals and people who want to stay away from, or people who are running away from the law. But Switzerland didn't care, and they were like, this is what we have to offer and this is how we are going to make our money.
In the 1960s, British coined them the gnomes of Zurich because they were the equivalent of hiding gold.
Gnomes of Zurich took me back to Harry Potter. In the first Harry Potter, when they go down into the Gringotts Bank and they go and they have these goblins which take you to these underground tunnels. So the British were, 40 years? They had J.K. Rowling beat by 40 years because they coined this term gnomes of Europe well before the first Harry Potter was released.
Maybe J.K. Rowling heard our podcast before writing Harry Potter. Who knows how? You never know.
She definitely didn't hear our podcast, but she must have heard some British banker use this term.
But yeah, instead of feeling bad about being called gnomes of Zurich, they used to wear it as a badge of honor because, they prided themselves over their secrecy. And the secrecy does come with a lot of other things involved. They had lenders who were linked to the Nazi Party officials at the time. And they have numerous movies where they show Swiss banks are the best place to hide your money. So it was publicly known that to do any kind of wrongdoings, Switzerland would be like the perfect place to hide your money. Now, in 1978 came the partnership with First Boston. First Boston was an investment bank at the time. And with that began their aggressive acquisitions in New York, in London, in Zurich. And then they started stamping an imprint on the world about their existence. And then they also started stamping their existence in high-risk game.
They basically took on from where First Boston had left off because First Boston was known as one of the biggest risk takers, and they were known to be the people who chased that exorbitant reward, even though a lot of their bets were very, very high risk. As I said, before Credit Suisse got in, First Boston had just lost $100 million on an incorrect interest rate prediction. So you can just imagine that if they were doing this in the 60s and 70s, what their DNA was, and $100 million back then is a lot more than it sounds.
And they were doing it an incorrect assessment of interest rate without Powell at the helm. Can you imagine?
Without this uncertainty.
By 1990, Credit Suisse had a controlling stake in First Boston, and First Boston actually had a lot of say in how they ran their US division.
Credit Suisse, in fact, bought a controlling stake after First Boston lost millions of dollars on the collapse of the junk bonds market. So junk bonds are basically very low-rated bonds, which are very high risk, very high reward. As we said earlier, First Boston was known to take a very high risk, high reward attitude towards investment banking. And upon the collapse of the junk bond market in the 1990s, Credit Suisse came in and took over a more controlling stake in them. As Financial Times says, First Boston's high-risk culture pervaded through Credit Suisse's investment bank for the next 3 decades.
So from 2011 till 2021, Urs Rohner was at the helm. He was the chief of the bank. And this was the worst time in the bank's history where the bank lost 75% of its value. And, this was just the beginning of the demise. Actually, prior to this, in 2008, a lot of the bank officials at the time said that was the beginning of the demise. And the demise was that they did not have a demise in 2008. So basically, in 2008, they did not require a bailout as UBS did. And when they did not require a bailout at the time, it kind of justified all of their high-risk behavior and gave them an incentive to get even more risky with their depositors' money.
Think about it this way. You're doing something wrong and you keep getting away with it. It just prompts you to keep doing that wrong more and more often. You think, oh, well, if I'm getting away with it, if
In fact, rather than getting punished for it, I'm getting rewarded. You just keep doing more and more and more wrong. However, if you start doing something wrong and in the initial stages you are caught, you often fix up your act and come back better for it. That's exactly what happened with UBS, because they were the ones who required the state bailout in 2008, 2009 during the financial crisis. But Credit Suisse was not affected. And they continued with their nature, they continued with their high risk, high reward play. And that has now eventually led to them falling like a house of cards in 2023.
So Credit Suisse was involved in numerous US legal battles. There is a full-on lawsuit going on about the subprime mortgages after 2008, 2009, where they did not take risk into account, and that is expected to go on for a long time. Along with that, they are being accused of fake tax returns for American citizens, which is just another ball game for a bank. They were also a part of Malaysian 1MDB scandal. We can start, exploring some of these scandals because they get very fascinating. I was watching the Netflix series of Madoff, which is amazing. So maybe we can go deeper into some of these scandals.
So you will hear this term risk thrown around a lot when we speak about banking. And they say that, oh, you did not judge the risk properly, or this was too high risk, or this was too low risk. This is because they say that the main job of a banker is to judge risk. So when your main job description is to judge the risk, and when your qualifications are in risk assessment, anywhere where you judge the risk wrong or where you get risk so badly wrong that your entire organization collapses is going to be looked at with grave scrutiny. That is why this term risk is thrown around so much. That's why we keep talking about high risk, high reward, or low risk. Judging risk. What is the risk of subprime mortgages that led to the entire fiasco in 2008, 2009? What is the risk with the current bonds that are going on? Why is interest rates and risk so closely associated? So all those things eventually come down to this whole concept of risk.
Also, to clarify, the word subprime generally means that there is no asset backing a particular kind of debt, or there is no assurance that the money from the debt is going to come back. So subprime loans do give out better returns. For example, your credit card may be a subprime loan. Hence, the credit card company is willing to charge you 20% on your credit card or 21% on your credit card. So that's why the word subprime is coming up again and again. And 2008, 2009 was another very, very long-winded and amazing kind of topic, which I'd definitely like to go back to. And considering how much we are getting into banking and financial structures, once we have a little more fundamental episodes in place, let's explore 2008, 2009 as well.
Definitely, dude. I think especially now with the current banking environment and what is going on with banks seeming to be more and more unstable by the day, by the hour, it's definitely worth looking back into what happened and what led to the 2008 crisis.
Let's talk about crisis. In Mozambique, they sanctioned a $1.3 billion loan, and this was to develop tuna industry. This country was completely corruption-ridden, and this country did not have $1.3 billion worth of GDP. And what ended up happening is the local officials and the bankers at the time just ate up all the money, and there was nothing left over. It cost $400 per citizen, which was the total GDP at the time of the country. So you can imagine the kind of things that, a bank starts getting into and the kind of things that start highlighting. So in 2015, their CEO was Tizan Tiam, and he had a falling out with a very aggressive wealth manager at the time in UBS called Iqbal Khan. The falling out was very interesting. They built houses next to each other, and then they had some kind of a construction falling out. And then, he threatened Iqbal Khan. He actually put out private investigators after Iqbal Khan, who chased Iqbal Khan and his family through the streets of Zurich. Just fascinating. By 2020, he was out as the CEO. In 2020, Thomas Gottstein became the CEO. And as soon as he became the CEO, within 9 months, in March 2021, they had to close a $10 billion fund in Greensill Capital, which Credit Suisse had sold to 1,000 of their wealthiest clients.
And they had promised high return and no risk. Guys, please be wary of this term, no risk or zero risk. There is nothing, there is no investment in this world that is going to be zero risk. You cannot invest in a government bond or in the government of your country with zero risk. Even that has a very, very low risk, but that still has risk involved. Anyone coming up to you and saying, hey, we have this thing which is of no risk to you, you know that person is selling you a bag of shit. So please do not, or be very wary of this term zero risk. A lot of people use it very loosely, but yeah, just be wary of it.
So Greensill Capital actually used their money to buy invoices to show that they are actually in business while they were not actually in business. And there are insurance wars that are going on. Again, there is no end in sight as to how long these insurance wars are going to go on for. Archegos Capital was another one of their losses, which was literally weeks after this loss. That was a $5.5 billion loss to the bank. That was more built on, fundamental failures and rising cost of credit default swaps. Again, it was down to the ignorance of risk. After these, loaner, the guy we spoke of earlier, the guy who was their chair at the time, was replaced by Antonio Horta Osorio.
So Mr. Osorio came in with some big plans of, changing his entire way of banking and making sure Credit Suisse straightens up after this whole $15.5 billion that they ended up losing through these two in 2021. However, before he could do anything, he himself was ousted because he went around flouting COVID rules and going in to watch Wimbledon and some Champions League football and whatnot. I can understand the sentiment, being an avid sports fan myself, but come on, man.
If Manchester United was going to lift the cup and there were COVID rules all over the place, I think we would still break the COVID rules and just go and watch Manchester United lift the cup.
We're not the chair of Credit Suisse, man. We're not responsible for this banking behemoth, which has just come from like a massive, massive loss, and you have come in to clean up the image. That is not what you do.
That's an Antonio Horta problem.
Exactly. So, Antonio Horta Osorio was short-lived, should we say?
So within 9 months, he was replaced by Axel Lehmann, who became the new chair. As soon as he came in, Credit Suisse became the first bank who was charged with criminal charges. And the criminal charges were that they were laundering dirty money for a Bulgarian wrestler who turned into a cocaine smuggler. You just gotta love the things that keep coming up, man. Like, fascinating stuff.
This just sounds like every single TV show and movie that you watch which speaks about these shady bankers doing all these things. And you think, oh yeah, these things never happen in real life. And then you read these stories and you read these revelations that come out of these massive organizations. And you realize that, in fact, there is some truth which leads to this fiction, which leads to the stuff that we see on screen.
I think one is inspired from the other, which is inspired from the one, and the cycle continues.
Yeah, I think they keep getting more and more and more audacious.
Adding to this, a 30,000 clients list was leaked of Credit Suisse. And in these were some not very appetizing clients, some clients who were charged with bribery in their past, and numerous other government officials who did not have the clean chips.
Amongst these 30,000, some of the more prominent names included one-time Egyptian President Hosni Mubarak, the former President of Kazakhstan, and Ronald Lee Fook, the former chair of the Hong Kong Stock Exchange, who was imprisoned for taking bribes. There you have it. That's the illustrious clientele that Credit Suisse boasted about. So that came with its fair share of scandals in itself, saying that, oh, you're taking money from murderers, criminals, and all the sorts.
In summer of 2022, Gottstein was replaced by Ulrich Kroner, who was the new CEO of Credit Suisse. And Kroner again came in, new strategies, and these strategies are gonna, ramp up solidity of the bank.
This has come to a point where these guys start sounding more like politicians and less like CEOs, man. They all come in, oh, we're going to do this, we're going to do that, oh, we promised to clean up our act, oh, we promised to do this, oh, we promised to do that. And then once they get there, nothing happens, things just get worse.
They sound like football club managers who come in and don't know which player to buy, or they plan that we'll buy this player and then they're gone before the end of the season.
Football players still have their hands tied because they have owners behind them. These guys are literally the ones in control.
The plan that he devised, but was gone before its implementation, was that they'll raise $4 billion from the Middle East, and they'll have 9,000 job cuts within the bank. And by late October, the bank was already crumbling. So then they were hit by a social media rumor. And after that rumor, the clients pulled $111 billion worth of Swiss francs from the bank, which was 8% of its total assets.
So there were essentially rumors about the financial health of Credit Suisse. People were speculating that it may not be as financially sound as it was made out to be. That was enough to spook its clients.
The largest owner in Credit Suisse was the Saudi National Bank, which owned 9.9% of the bank. And it was because of the regulation that one bank cannot own more than 10% of another bank. So they just pulled any further funding to the bank. They were like, our hands are tied, pockets are not deep enough. So we mentioned this quite often, that debt is what kills you and any liability is what kills you as a person, as a company. And here, when you have such liabilities that keep piling on and on and on, you need deep pockets, and suddenly all of their deep pockets were cut off. So let's get deeper into the final device, the final things that started happening.
So at the start of 2023, FINMA, the Swiss financial regulator, investigated the accuracy of comments Lehman made over the scale of outflows, while the bank was forced to delay publication of its annual report after auditors at PwC spotted material weaknesses in its internal controls and the US Securities and Exchange Commission demanded more information.
In 2022, the deposits of the bank fell by 40%, down to $252 billion US. The assets of the bank fell by 30%, down to $571 billion. And the net losses posted by the bank in 2022 were $7.3 billion. And these were already huge red flags for the people who had their bank accounts in the bank. Within 3 days after the Saudi National gave its statement that we are going to pull funding, $35 billion were pulled out of the bank by its depositors. And the CDSs on the bank were surging. So CDSs are a credit default swap. Basically, in the event that the bank goes under, the people who own the CDSs make a lot of money on the CDS because they are betting on the bank going under. The shares of the bank had already plunged 24% after the statement of the Saudi National Bank. The shares had already plunged by 24%. On Wednesday, March 15th, the bank declared that they would use national funding of $54 billion to keep themselves afloat and to fulfill their deposit commitment. Over the weekend, however, it was sure that the bank was not going to be able to stay afloat. And UBS came in. The government asked the bank to either sell themselves to UBS or to go completely under. So some details of the merger that happened is it is an all-stock deal. Basically, the owners of the stocks of Credit Suisse at the time will receive one UBS share for 22.48 shares of Credit Suisse. It is at a 60% discount to their market value on Friday, March 17th. And it is at $3.2 billion valuation for the bank. There is no shareholder vote as to whether the takeover will happen or not. It is completely government-oriented. CS, Credit Suisse, will be delisted from New York Stock Exchange and all other exchanges it trades on. And the deal will be completed by the end of 2023.
So in reaction to this, investors sold shares of European banks early on Monday, the 20th of March, but they later gained some ground. The biggest loss, though, was that investors dumped additional Tier 1 or AT1 bonds across the banking sector. Now, AT1 bonds are essentially debt securities issued by banks. They are a form of borrowing, but they have a bit of a twist to it. This is the bank's way of saying heads I win, tails you lose, because AT1 bonds are only paid back if the banks make money. So what a bond does is that, it's a commitment. It's a debt feature saying that, hey, I'm giving you this bond when borrowing money from you today. But say in 3 years' time, I am going to pay you back your money that you have given me today in full, plus some interest. And no matter what happens, you are guaranteed to at least get the amount you have paid back in full. AT1 bonds do not work that way. If the bank gets into trouble, they do not need to be paid back. They are like a special ace up the bank's sleeve, where they're like, you know what, this is a high risk thing. And if we, the bank, are making money, our investors are very happy because they're making some phenomenal returns on these bonds. But if we, the bank, go under, we're not liable to pay for these bonds. So that's great.
So there's this thing called the waterfall effect in case of any company going under. And in what happens in the waterfall effect is primarily the owners of different kinds of liabilities or equity of a company are placed in a tier list. So highest would be the bondholders. And within the bondholders, there will be a hierarchy. There will be better bonds and there will be worse bonds. After the bondholders come the preferred shareholders. And after that come the common stockholders. So if you owe $120 in the market and your shareholders have an equity of, let's say, $30 and you have $90 worth of bonds, $90 worth of debt in the market, then the debt will be paid off first and then the leftovers will be fed to the shareholders. However, in this case, these bonds are vanishing. This debt is vanishing. So in case you cannot pay anything, the debt just vanishes and the bondholder gets nothing. The bondholder is essentially the one you're paying the debt to. And if you borrow money from me, I'm the bondholder. You owe me money, but I can just, sell it to Vishwath and then you owe Vishwath the money. So now Vishwath is the bondholder. So that's essentially how bonds work. It is transference of debt ownership or transference of debt receivability. So yes, all of these AT1 debt holders within Credit Suisse went under. All of this was gone, poof, overnight. And it was facilitated by the government. So you really can't say anything to anybody.
They basically cut their losses, man. You may ask what caused all this crisis, especially today. So I think not only the Saudi National Bank saying they're not going to put in any more money, but also all the stuff that was happening with SVB and Signature Bank and all these banks going under thanks to all the bank runs that have been taking place. There was just a very, very, the atmosphere was very jittery. There was a lot of, investors were on high alert. They were looking for any and every reason to get money out of their bank accounts because there was major distrust. So the Saudi National Bank's statement sort of just pushed Credit Suisse over the edge.
We can be smart about it and we can call it the tipping point. And to know more about the tipping point, you can please go listen or watch our episode on the tipping point. It has nothing to do with this discussion.
What was that? Our 4th or 5th episode?
It was. It has nothing to do with this discussion, but it is a lovely episode. Please go watch.
Oh yeah, it has nothing to do with banking. It has nothing to do with this discussion. But we hope you go watch it and make us viral.
Just a little plug from us. I think we deserve as much. So this was our short story about this rise and demise of this beautiful bank, which was not beautiful by the time it went down. Hope you enjoyed. Thanks for joining us. We hope to continue to bring you some interesting news from around the world and keep you informed and keep you entertained, and hope to see you again next time. Thank you.